asterisk, asterisk, voice, asterisk, asterisk. Welcome back to XRP Macro, the channel where we break down the biggest XRP and crypto stories in simple terms, so you can stay ahead of the market. Today we have a massive topic to cover because one of the world's biggest banks, Standard Chartered, still believes XRP can reach an eye-popping $28 by the year 2030. That's right, even after one of the most frustrating years for XRP holders, this bullish prediction is still on the table. But there is a twist in this story that every investor needs to understand. Ripple's own stablecoin, RLUSD, may actually be standing in the way of XRP reaching those huge price targets. So the big question today is simple. Is XRP preparing for one of the greatest comeback stories in crypto history, or is the network growing while the token itself gets left behind? Let's dive right into it. If you've been holding XRP recently, it has definitely been a painful ride. While Ripple has been collecting victories one after another, the price of XRP has continued moving in the opposite direction. The legal battles that hung over XRP for years are largely behind it. Regulators have started treating XRP more like a commodity than a security. Spot XRP exchange-traded funds have attracted billions of dollars in investor interest. Normally, all of this would be enough to send an asset soaring, but instead, XRP has spent much of the year sliding lower and testing levels that many investors never expected to see again. The disconnect between the good news and the actual price performance has left the entire XRP community confused. How can the fundamentals improve while the market keeps selling? That question is now at the center of every discussion surrounding XRP's future. At the moment, XRP is trading close to levels not seen since late 2024, and it's sitting dramatically below the highs it reached during its big rally. Investors who bought during that run are still waiting for a recovery. The broader crypto market has also struggled, with Bitcoin and many altcoins experiencing heavy selling pressure. However, XRP's situation stands out because its weakness comes at a time when Ripple's business appears stronger than ever. Usually, investors expect the token of a growing ecosystem to benefit from increasing activity and adoption, yet that relationship seems to be broken right now. For many holders, it feels like watching a company report record earnings while its stock price keeps falling. That creates uncertainty, but it also creates opportunity because markets often misprice assets during periods of confusion and fear. This is why there are now two completely different visions for XRP's future. The first view is incredibly bullish. According to this argument, XRP is simply experiencing a temporary period of weakness before institutions finally step in. The legal clarity is improving, the ETFs are bringing fresh money into the ecosystem, and major investors have reportedly continued accumulating despite the decline. In this scenario, today's prices may eventually be remembered as a massive buying opportunity. The second view is much less exciting for holders. It suggests that Ripple's network can continue growing, signing partnerships, and handling massive payment flows without creating meaningful demand for XRP itself. Under this scenario, the network wins, but the token never truly benefits. The battle between these two possibilities is exactly why predictions for XRP in 2030 are so wildly different. One of the boldest predictions comes from Standard Chartered. The bank's analyst, Jeffrey Kendrick, has maintained that XRP could climb all the way to $28 by the end of the decade. That would represent an enormous gain from current levels, and would push XRP's market value into territory only a few digital assets have ever reached. What's interesting is that despite changing his shorter-term expectations during market weakness, Kendrick refused to lower his long-term target. That tells us something important. The bank still believes the conditions for explosive growth remain intact. It sees XRP as an asset that could eventually capture a meaningful share of the global payments industry. If that happens, today's market value could look incredibly small compared to where XRP might eventually trade. But Standard Chartered isn't the only institution making forecasts. Other analysts have created models showing outcomes that range from less than $1 to nearly $30. That's an absolutely massive gap, and it highlights how uncertain the future remains. The bullish models assume XRP becomes a major player in global payments and tokenized finance. The bearish models assume traditional banking systems remain dominant and that stablecoins capture most of the money movement instead. The truth is that both outcomes are possible. Nobody can predict the future with certainty. That's why investors need to understand the assumptions behind these forecasts rather than focusing only on the price targets themselves. The number 28 sounds exciting, but the real story lies in what needs to happen for that prediction to become reality. There are also plenty of unrealistic price targets floating around social media. Every bull market brings predictions of $100, $500, or even $1,000 per XRP. While those numbers generate excitement and attract clicks,
They require market values that would dwarf almost the entire crypto industry as we know it today. Serious analysts tend to avoid those extreme scenarios because they simply don't align with realistic adoption trends. Instead, most institutional forecasts fall into a much narrower range. Some see XRP reaching high single digits, others see prices in the low double digits. Standard Chartered remains one of the most optimistic major institutions with its $28 target. That alone makes its prediction worth paying attention to, even if investors should remain cautious about expecting such a dramatic outcome.
The biggest reason for caution is a fast-growing player inside Ripple's own ecosystem. That player is RLUSD, Ripple's dollar-backed stablecoin. Over the past year, RLUSD has quietly become one of the most important assets on the XRP Ledger. Liquidity has increased dramatically, network activity has surged, and institutions have shown growing interest. On the surface, all of this sounds fantastic for XRP holders. The problem is that much of the new money entering the ecosystem is choosing RLUSD instead of XRP. Investors expected XRP to be the star of Ripple's payments network, but the stablecoin is increasingly becoming the preferred asset for moving value around the system. That shift could have major implications for XRP's future demand. The original vision for XRP was simple. It would serve as a bridge asset, allowing banks and institutions to transfer money quickly between different currencies. The process would be efficient, fast, and cheaper than traditional systems. However, there is one major issue with using a volatile cryptocurrency for large financial transactions. Institutions generally prefer stability. A company moving millions of dollars does not want to worry about sudden price swings. That's where RLUSD enters the picture. Since it is tied to the value of the US dollar, it removes much of the uncertainty associated with using XRP. As a result, many institutions may choose RLUSD instead of XRP whenever they have the option. This could reduce the demand that many investors expected XRP to receive. What's even more interesting is who appears to be holding RLUSD. Reports suggest that a large percentage of the stablecoin is concentrated among a small number of addresses. That strongly indicates institutional participation rather than retail speculation. In other words, the very players that XRP holders have been waiting for may already be entering Ripple's ecosystem, but they are choosing RLUSD instead of the native token. That's a difficult reality for many investors to accept because it challenges one of the biggest bullish narratives surrounding XRP. The network can succeed, Ripple can continue expanding, and institutions can continue arriving, yet XRP's price may still struggle if the demand flows primarily into the stablecoin rather than into the token itself. To be fair, this doesn't automatically mean XRP is doomed. There are still ways in which the growth of RLUSD could eventually benefit XRP. Some of the largest liquidity pools within the ecosystem involve trading pairs that include XRP. Increased activity around the stablecoin could eventually create additional demand for the token, especially if XRP remains deeply integrated into the infrastructure of the network. However, investors should recognize that this positive outcome has not fully materialized yet. The market is still waiting for clear evidence that rising activity on the XRP ledger is translating into stronger demand for XRP itself. Until that relationship becomes more obvious, uncertainty is likely to remain a major factor influencing price performance. There are also several powerful catalysts that could completely change the story over the next few years. One of the biggest is the continued growth of XRP exchange-traded funds. The launch of these products has already brought substantial investor interest into the market. If inflows continue accelerating, they could create a significant source of new demand. Institutional investors who previously avoided XRP due to regulatory concerns may become more comfortable allocating capital as the legal picture improves. If billions of dollars continue flowing into these investment products, it could provide a major boost to XRP's valuation and potentially support some of the more optimistic forecasts that analysts are making today. Another potential catalyst is regulatory clarity. Proposed legislation and improving legal frameworks could make institutions far more willing to engage with XRP and other digital assets. Large financial firms generally avoid uncertainty. Once clear rules are established, a huge amount of capital that has been sitting on the sidelines could begin entering the market. XRP is particularly sensitive to this issue because it spent years battling regulatory challenges. A friendlier environment could finally allow the asset to compete on a level playing field. At the same time, the XRP ledger is increasingly becoming involved in tokenization, a rapidly growing sector that many experts believe could transform global finance over the next decade. If that trend continues, XRP may benefit from being part of an expanding ecosystem. However, there are also challenges that investors cannot ignore. Ripple still controls a large amount of XRP through its escrow system.
Although much of the released supply is often placed back into escrow, new tokens continue entering circulation over time. Every additional token creates more supply that the market must absorb. This means demand has to keep increasing simply to maintain current price levels.
When analysts discuss ambitious price targets, they must also account for the fact that the total supply picture changes over time. This supply dynamic doesn't make high prices impossible, but it does create an additional hurdle that bullish investors need to consider when projecting future valuations. So where does that leave XRP by the year 2030? The answer depends entirely on one critical question. Will the growth of Ripple's network eventually create meaningful demand for XRP itself, or will that growth continue flowing primarily through RLUSD and other products? If institutions begin using XRP at scale for payments and settlement, then the higher-end forecasts suddenly become much more realistic. In that environment, Standard Chartered's $28 prediction might not look so outrageous after all. But if the stablecoin continues capturing most of the activity while XRP remains on the sidelines, then more moderate predictions in the $8 to $12 range may prove closer to reality. For now, the market remains divided. Some investors see today's weakness as an incredible long-term opportunity. Others worry that XRP's role inside the ecosystem is gradually changing. Both sides have valid arguments, and that's exactly why the coming years could be so important. One thing is certain, the story of XRP is far from over. The next chapter will likely be shaped by institutional adoption, regulatory progress, ETF demand, and the ongoing rise of RLUSD. Whether XRP ultimately reaches $28 or falls short of that target, the road to 2030 is shaping up to be one of the most fascinating journeys in the entire cryptocurrency market.
And that's the latest XRP update for today. Do you believe Standard Chartered's $28 prediction is achievable, or do you think RLUSD could limit XRP's upside over the long term? Let us know your thoughts in the comments below. If you enjoyed this breakdown, make sure to like the video, subscribe to XRP Macro, and turn on notifications so you never miss the biggest stories shaping the future of XRP and the crypto market. Thanks for watching, and we'll see you in the next one.